Good evening, everybody. This is Johnny Seville from Acorn Wealth Corp, and this is just a quick reminder that we are having our Smart Money Trade Setups webinar this Tuesday. Now, many of you have already registered for that, and for those of you who have, and for those of you who haven't, I'm just going to give you a quick summary of what we're going to be coming on we're talking about on Tuesday night, and why this is going to be an event you don't want to miss. Just a quick standard disclaimer up on the screen. But on Tuesday night, we are going to be talking about my favorite strategy, which is how to piggyback explosive smart money moves by following the insiders. We're going to be going through how to use insider buying and selling activities to detect explosive trade setups and what to look for, how to use the most powerful technical patterns to time your entries and exits with consistent accuracy. Very importantly, what the smart money indicators are saying right now and where the overall market is headed, and some of our favorite trade setups. I'm about to tell you about one of them right now that I'm in personally. We'll also be giving away a very powerful indicator, which has signaled market reversals up to 92% accuracy over the last 8 years, and how to use it, giving that away to everyone who comes to the webinar live. So let's have a quick look at basically a little summary of what we're going to be touching on Tuesday. Firstly, right now the markets are at very dangerous highs, and let's just talk about that for a quick moment. Right now, the S&P 500 has been rallying since the beginning of May in an upward channel. You can see the midline here. We'll just take everything else off to simplify this. You can see the midline of the channel here, the top of the channel, the bottom of the channel. For those of you who don't know, an upward channel is bearish, and when an upward channel, which means it should break down. Generally, an upward channel, you measure from the top to the bottom, and then when it breaks down, that's how much it breaks down by. That is what upward channels do. When they don't break down, it is a warning that something even more bearish is signaling. And that's exactly how the 2008 crash began. One of the things we'll be talking about on Tuesday night. More importantly, let's take the market out of it for a second. So you can see the market's going up, apparently, and kind of just going up and sideways. But if you look at actually stocks in the market, go and have a look at this. This is the amount of stocks in the market that are above or below their 50-day moving average. This is being shown as a percentage. So you can see we've come from 32% of stocks were above their moving average, the 50-day moving average in August. We've rallied all the way up in this strong bull market. And now we've gotten to 80% of stocks were above their 50-day moving average. So that might be, to many people, a sign of great bullish activity. But if you look at a weekly chart of this indicator, just so we can look at a longer time frame, let's go back 10 years. So all the way back to June of 2010, have a look at this. Every single time we have reached this 80% mark, you can see that we've broken down from here, 1, 2, 3, 4, 5, 6, 7, 8, 9 times. 9 times we've hit here. Within 1 week, we've gone straight down. And that's not the market, that's the stocks in the market, which is far more important because the S&P can be manipulated. This shows you what the actual stocks in the market are doing, which are the ones you're trading. That's what matters most. So let's have a look at the times where it didn't break down immediately from this area was 1, 2, 3, 4, 5 times. And whenever that happened, we were within 1, 2, 3 weeks, 1 week, 1, 2, 3 weeks, 1, 2, 3 weeks, 1, 2, 3, 4 weeks. We were within 2 to 3, sometimes 4 weeks max of the entire market or stocks in the market going straight down. So there is 100% accuracy back to June 2010 of this indicator at these levels being warning of a 2 to 3 week sharp reversal in the stocks in the market. So that's what we're dealing with. And what that means is that over these next few months, this could possibly be devastating for traders who are not on top of this, who aren't prepared for this, and who aren't looking in the right areas for the best ways to take advantage of the shorts and aren't taking advantage of the strongest longs that will be protected from this kind of drop. So now, more than ever, it is important to have an edge in this market. This is as you can see, over 7 years, we've only been in this territory. I think it's 13 times, and this is one of those times right now where we could have at least a 5-10% pullback, possibly even worse in the overall markets. So this is why I think strategy is so important, and why I'm going to talk to you about the types of stocks that I'm trading. Right now, I am still mostly long, so but not long in just anything, but looking for where the smart money is buying, because these are the plays you want to be looking for. So the first one I want to talk about is JASN. Let me walk you through this one. So JASN. Now this stock used to trade up around around $8, $10. As you can see, this thing's came all the way down over a long period of time, and it came up in my smart money scan back here in early September. Now this is a lower dollar stock, but this is something I use. It could be something I trade on a dollar stock, a $10 stock. Right now we're using the same scan to look for shorts on things like MGM Grand. So this is not dollar specific. It's strategy specific. And this stock, as you can see, was basing along here and just broke through resistance here at $1.30. Now this is below, you can see, is a smart money indicator, which gives us an indication of whether the high frequency trading or smart money is buying or selling. And what you'll notice is as the stock went sideways, the smart money indicator went higher and higher and higher, and then broke out at the same time the stock did. So this was the reason why I then decided to buy this, and I bought this at I think it was $1. I'll just check that in a second, but around $1.40. So I bought that with my own personal money and as a long. Now, this wasn't just a very interesting technical breakout, but what was really interesting was that right before this breakout happened, all through May, what you'll actually see is that, and this comes up in our research, was that the insiders were loading up. Have a look at this. The 10% owner, Winfield Partners, increased their position by 23% with over 573,000. The director, James Hyman, increased his position with his own personal money by 83%. James Sullivan, brand new, first time he ever, as an insider, had put his own money into the company. The CEO, Brian Koblinski, put another 38% of his own money. All of this happening within a short period of time. New buying, big percentages and big increases, seeing as there was no real other activity for quite a while going back. So with that, combined with the pattern and the smart money indicator, that was a slam dunk. So I got in, and I had a look at where resistance was, because I want to make sure I bank some profit. Number one, make money. Number one goal. So even this goes to $10, I wanted to make sure that I took some easy profit off the table and protected my capital. So I set my first target at $1.79, looking at this resistance cluster over here. So I set my first sell there and took half off the table. And as you can see, the stock rallied up sharply, and if you have a look, sold half at resistance. This is an actual screenshot from my brokerage account. There you go. From the 4th of October was actually the fill date. That 6th date was my settlement date. 4th of the October, I hit my sell. So it was actually 5 trading days that the 26% profit was achieved in, and so that was the first win. And then I updated my stop loss and let the rest run. So right now, as you can see, it's broken through that 180 zone. It was significant resistance because we went from 192,000 shares to 519,000 shares. Bang! Went straight up through it. We're now at kind of this next resistance zone where we need to take. So I've updated my stop loss to 177. I have allowing to lock that profit in, and by giving it the potential to move further. Because of course, with that kind of smart money buying, it could easily get up to $3.40 or something like that. But no matter what happens here, I've made money, which is perfect. Unless we have some huge gap down, which is very rare, but that's what stops are for. And protecting profit. So again, so as you can see here, again, this is still something I hold personally. You can see I've sold the first 3,500 shares for the 26%, and I'm holding on to the rest. So again, bought it back on the 28th of September, still holding it as of the 13th of October, and I've got a 41.6% gain on the rest of it, or $2,600 profit. And all of that $2,600 plus the other 1,500 odd, so roughly 4 grand of profit. That took me literally about 5 to 10 minutes to find using the Smart Money Scanner and going through the process of keeping it simple. You don't need common misunderstandings about trading. You do not need 15 indicators to make money. You do not need $10,000 pieces of software that have some magic formula. You do not need to spend 10 hours a day going to war with the market, with emotional trading and revenge trading and giving all your profits back. All these things people associate with the stock market. It's just simply not true. There's a much easier way, and that is to keep it simple, which is what I've been doing for the last 10 years. And keeping it simple means looking at where is the money going. If that statement has been true for as long as for as long as I've been alive. Follow the money. You hear that all the time. Where's the money going? That's your answer. So follow the smart money. There's 3 ways to do that, or there's several ways to do that. Obviously, look at the pattern. If 90% of the volume in the market comes from high frequency traders and high frequency trading follows rules, which are patterns, then just simply trying to understand the high probability patterns is an easy way to find good trades. Secondly, follow the smart money. Look at the smart money indicator and see where high frequency trading is going, and then look at what the insiders are doing. And by combining these simple things, this gives you an edge that most traders have not even heard about. We're going to be talking all about this on Tuesday night, and of course discussing giving away one of these indicators to everyone who attends live, going through several other trades just like this that I hold as well, and talking about ones that are still in play, as well as what we see coming and some other potential setups. So don't miss it. Again, it's Tuesday night, 8:15 p.m. Eastern, and we'll be going through everything there. So if you've registered already, great. You should have your invite already in your email. If you haven't registered already, simply go to acornwealthcorp.com/event. It's going to be epic, and look forward to seeing you all there. Have a great night and happy trading.